Hi, everyone. Welcome to Analyze Your Trade, episode 19 for January 16th, 2018. Tonight, we will be discussing your trade ideas. Over the last few days, over 70 people submitted up to 5 symbols each for us to talk about this week. And you should be seeing the list for this week on your screen right now while I'm talking. My name is David Kosmeter. I'm the creator of Timing Research, and I developed this show with Dean Jenkins of Follow Me Trades. And he is here to moderate tonight, so I'm going to go ahead and turn it over to him.
All right, thanks, David. It's great to be here, and it's great to have a good panel tonight. We got a real mix. We got an alpha shark, fins to the left, fins to the right. We got the mad hedge fund trader, and we got the option professor. So we should get a real diversity and depth of analysis tonight. I'm really looking forward to it. These shows are super fun. And sometimes take away good trade ideas. So I'm ready to get started. First thing we want to do is go ahead and have the panelists introduce themselves. Just 1 or 2 minutes. Just a quick introduction for folks watching who you are and what your thing is. What are you focused on? And we'll start with Mike.
Hey, Dean. Thanks for having me. It's great to be here with everybody today. My name is Mike Pisani. I'm with Alpha Shark. If you want, you can follow me on Twitter at OptionsMike. And at Alpha Shark, we have a trading room. I focus on options, and I focus on the flow throughout the day. Some people just focus on unusual option volume. I actually focus on what the option flow is telling me through the day, what names they're rotating in, what sectors, how they feel overall about the sentiment in the market. And I relay this back either through my private service through Alpha Shark or back into the room itself throughout the day. And we tend to focus on just, the rotation that we've seen here. I mean, it's been a hell of a start for the last 2.5 weeks, right? This year's been kind of incredible, and today was a great day to take risk down, and we were doing that in the first 30 minutes. And for people that followed me, most of us missed out on today's little fun and adventurous game. So if it's something you're interested in, you can follow me at OptionsMike, or you can just come and sign up with us live at the Alpha Shark. Just go to AlphaShark.com. Again, thanks for having me. Look forward to tonight.
All right, OptionsMike. Glad to have you.
Who's that there? Dean?
Yeah. So
lost my sound.
Uh-oh. I'll make I'll sign for you, John. No sound yet.
Hey, David, if you can hear me, I'm not getting any sound.
Well, we're going to go ahead and jump until John gets his audio worked out. And so we're going to move over to Jim Kenney from Option Professor, the Option Professor. So Jim, if you can introduce yourself.
All right, Dean. Thanks a lot, buddy. The Option Professor, I provide the content to their DVDs, and basically it's an education firm on the uses and the risks of option trading. And so strategies for rising markets like credit put spreads and down markets for credit call spreads and things such as covered call writing, and then adjusting the position by rolling the positions. And then, of course, hedging, where you could do collar strategies, taking the covered call money and using it to buy insurance so that if something comes out of the blue, you've got some hedge on. So there's a lot of different moving parts in options, as we all know, and Option Professor's got 7 DVDs to give you some clarity.
Clarity. That's all we want. Just clarity in the markets. And what we want to be the most clear about is what's going to happen next, man. John, are we back with John? Or is he logging out and logging back in?
Yeah, I think he's logging back in now. John,
Okay.
Can you hear us?
Yeah, I can hear you. Can you hear me?
Yeah, sounds good.
Okay. Yeah, I could see your mouth move, but no sound. You were doing a great impression of a mime.
I was doing that just to mess with you, man.
Obviously.
Yeah. Well, we're around to you in the introduction. So, the Mad Hedge Fund Trader, John, if you'd tell us what that's all about.
We're a daily research blog doing long, short, macro, covering stocks, bonds, commodities, energy, precious metals, real estate, and currencies. Averaged a 58% return in the markets last year, and have been at the game for about 50 years. You can find us on madhedgefundtrader.com. and always happy to participate in these panel discussions.
Yeah, it's always fun to have you here. You add some seasoning to the stew, so it's good. All right, I'm Dean Jenkins, founder of FollowMeTrades.com. I am a trader first and foremost, and I run a stock advisory service. I just call out the trades that I'm going to be taking on my own account, and you can see the performance on my homepage, FollowMeTrades.com. We've got the year-on-year results posted, and they're confirmed and audited by a third-party CPA. I also offer courses, and I run a live trading room for an hour and a half in the morning. We're not day trading. I'm not really interested in day trading, but we do look for new trades. We manage trades and analyze what is going on in the market each morning. So that's me, Dean Jenkins, Follow Me Trades. Well, we've got a great list of stocks here. Some of these I'm interested in taking a look at. A couple I think that I've never heard of. So that's good. I'm always interested in seeing a new symbol and revisiting some old friends that we've traded for a profit in the past. So first up, we're going to go through these pretty fast, kind of like speed dating. We'll just look at a symbol, and then each of the panelists will weigh in. And, you know, it's really thumbs up, thumbs down, you know, hey, I like it, and here's how I trade it. Or I don't like it, I wouldn't touch it. Or, you know, yeah, kind of lukewarm on the thing, or some ideas. But again, pretty fast. We're going to go through, we're going to try and get through a bunch of these. About halfway through, I'll ask each of the panelists to share what their own favorite trade is that isn't on the list. Something that you're watching or trading right now or getting ready to trade. So try to make it interesting and informative. So first up, Applied Materials, AMAT. And we're just going to keep that same order. So Mike, if you want to lead off here, what do you think about Applied Materials, man?
AMAT, man, you got a nice wedge here on the chart. I hope you guys can all see my chart. I have a screen up for you. You have this nice wedge that's coming in. It hit all-time highs about a month ago. This is one of the few names we haven't heard of problems with the vulnerability on their chips, and earnings are another month away, and I think this wedge is going to break before then. So if it gets above that trend line there, I'd go long this thing for a run back to 60 and all-time highs. That said, if it gets below there, I'd be looking to short it for a run down to the 200 around 47. How's that for quick and easy?
That's quick and that's easy, man. Very nice. John.
Yeah, I'm a total buyer of AMAT. Love the chart. Love the breakout that'll happen after this week. Love the sector. Got a temporary entry point because of the trouble that Intel is having with their chip design flaw. It's taken the whole sector down. So take the gift. There's not a lot of good entry points anywhere these days. I'm a buyer.
Right. He's a buyer. So 2 up. Jim, tiebreaker, or you know?
Yeah, no, it's in an uptrend, and you know, it had the ETFs, SOXX and SMH. They had huge high volume sell-offs in early December. Really high volume during that sell-off, and now it's obviously got back on the bicycle. You know, the 200-day average is at 47 and rising, so that's not a bad thing. You know, obviously it's a little bit over it at 54. This might not be a bad thing to look at pricing out some strangles. You know, if it breaks above 60, it's off to the races, and it breaks under the recent lows, then obviously it could fall apart because this volume on the way back up has not been quite as big as the volume down on the ETF. But the volume in AMAT looks pretty good, and the semiconductors have definitely turned back up again. So we'll have to see if it can sustain itself. But with it right being in the middle, you know, if the premiums are low enough and it makes any sense, pricing out a strangle wouldn't be the worst idea in the world.
All right.
Yeah,
So,
guys, this is the sort of thing you spend all day looking for. There are not many of these around right now.
That's not a real good turning point one way or the other.
So it's interesting. A couple folks referenced Intel. You know, we talked about semiconductors here. I worked for Intel for a long time. I was working there in '93 when the Pentium floating point
Calculations.
Yeah, and it's funny. The company's initial response was, "It's not an issue. It's not an issue. It's not an issue." Okay, fine, we concede, and they finally got saved their reputation and the company. And there's been a couple of regime changes since then, and they're doing the same thing again. Unbelievable. right? Go study the history books, guys. But anyway, Applied Material clearly in a bullish trend. Did have that pullback like so many semiconductors late last year. I like the way it's resting on top of the Ichimoku cloud. You can see on my chart here that I'm sharing. It looks like it's finding some support there, and I would like to see it just continue up. Maybe this little minor high, pop above, 56.30-ish. If it were to pop up there, then it probably is going up, into fresh highs, 65 range. If it continues to consolidate or breaks down below the cloud, then there might be a problem. So I just look for a little more confirmation that the uptrend is going to continue. That'd be a bull to go long on AMAT. Kind of like it. All right, next up, First Solar, FSLR.
All right, so First Solar, this name trades loose and sloppy. That's the one thing you always have to be aware of with it. And we had a beautiful breakout on last Thursday, and it gave the whole move back in 2 days. I mean, that's just not what you want to see in a daily chart. That said, we have a nice uptrend intact. This stock has a tendency to do that. And the reason why it pulled back so hard is you have to go to a weekly chart, and you have to take a look at a weekly chart. And we've come into some big time resistance on a weekly chart. You can see here now, this goes all the way back to April 2014 when we first hit this spot after pulling way back. And it may just need to make a little bit of it's got the cup, make a handle here now before it's ready to go. It might need to consolidate here a little bit before it's ready to go. You see RSI is really burning hot on the weekly. And it may just need to come down and cool off here in that 68 to 64 area again before it's ready to go. So I like the chart long term, but short term right now, I would not be a buyer until it either breaks down up or gets down a little lower, maybe off the 50-day around 65.
All right. Long term, but not now. Got it. John?
Yeah, we've been a bull on First Solar for a long time. Basically trades in lockstep with oil, which has also had a great run the last couple of months. The more expensive convention energy gets, the more expensive alternative energy gets. That's basically the game. That said, oil's overextended to the upsides, and so therefore First Solar is. So I think you are going to have a tough time getting through this upside resistance. It'll take a couple months to happen, but eventually they'll do it.
All right. Mr. Kenney.
Yeah, looks, obviously it looks like it's had a big run here. Volume on a 50-day basis is like 2.2 million versus 2.7 almost on 200 days. So the volume has not been, huge on the way up compared to the longer term averages. And the big thing here is the 200-day average is at 47 and you're trading at 71. So you're 51% above the 200-day. And, by most definitions, that would be a little bit high. And it seems like they're losing money according to the EPS that I'm looking at. So company's not making money. It's 50% over its 200-day, and maybe it's a good deal, but it wouldn't be for me.
Oh, earnings are overstated. As long as it's cool, right? Look at Tesla. Come on.
Yeah.
By the way, First Solar has always been expensive, and that's because there are just so few profitable solar companies out there that this one always trades at a premium.
Yeah, there's not many games in town left. They don't have any subsidies that help them anymore, do they? Or maybe they do.
They never really did. There are other subsidies in that some states like California, for example, still have targets to get either 50 or 100% of their electricity from solar in the next 20 years. So there's more or less a permanent regulatory buyer of solar energy there.
But here in Nevada, they pulled it, John, didn't they?
What's that?
In Nevada here, didn't they pull the subsidies?
They did, but I'm talking about California.
Yeah,
where
right.
They sell all their power to.
Oh, I got you.
And by the way, some days our wholesale cost of electricity is zero because solar is overproducing and they've got no place to put it.
Right.
So I love this chart last summer. I got a couple lines here where I'd looked at it before. I think I agree with the overall sentiment in terms of, wow, that's been a big move. A little sloppy. That was the first term I think Mike used, right? Pretty volatile. Great move coming out of the summer. And it would have been a good entry. It would have met my criteria.
Yeah,
but now
that would have been the time to love it.
Yeah, and now I love looking back and going, what an awesome trend for me to touch that thing.
Yeah.
Like a hot 10 solar roof, right?
Yeah.
Ow.
Time to find a new girlfriend.
Yeah, exactly. But it's one of those charts you like to look at and go, dang, why didn't I ask about this in August when we were launching the show? We've been all over it. Next one up, RTN. I think that's Raytheon, is it?
Yep, Raytheon. Man, this is a tough one. I mean, these some of these defense stocks have been through the roof. You had a big reversal today, and that candle today is a reversal candle, right? So after a nice breakout of a consolidation period, we got a run, we got extended out of the Bollinger Band, way off the 8-day, and you got a reversal candle here today. You have earnings are next week on the 25th. So for me, right now, until after earnings, this is a no touch for me. I wouldn't even look at this stock here with earnings that close. And long term, it's been in a massive bull run. We've run, let's look at the weekly. I mean, it's just been grinding higher steadily for the last 2 years. Can it go higher? Sure. Will it? I don't know. It's to me, this is not a great entrance spot for it. I would pass on this name.
All right, Mike's a pass. John.
Yeah, this basically has been running 2 years off the election results, and a lot of buying of defense stocks. No new wars. Doesn't line up for me. So, I think there's too many other better sectors to play right here. I'll pass on defense.
Okay, 2 thumbs down. Okay, that was Cisco. What do you think, Ebert? Jim?
Well, I think the volume is drying up a little bit here, 50-day versus 200-day, while it's gone up. So I don't think that's a tremendously good thing. And it is about 15% at one point this week above its 200-day. So that's a little bit extended. If you own this thing, it might not be a bad thing to consider what the collars look like if you want to kind of hang in there and have some protection underneath. And that would be something that if I owned it, I'd probably be investigating right now.
Yeah, if you own this and are married to it for whatever reason, write calls against it. Yeah. This would be a really good time to do that.
And maybe even get some puts in there to make sure you got some hedge underneath beyond the call.
Yeah.
So I have a grudge against Raytheon. I was in the Navy a long time ago and worked on
that explains everything.
Yeah, exactly. And I worked on radar sets, and I forgot to follow the proper grounding procedures, and it almost died.
But that was exciting.
20,000 volts across the chest. It was really cool.
Yeah, you were the ground.
I was the path. But I survived that, but I've never felt the same about the company. And that notwithstanding, what a beautiful trend. This is a trend trader, momentum trader's dream.
Yeah.
Right. But that's not me. I'm a swing trader.
Yeah.
And it's a swing trader's nightmare, right? This would keep me up at night. When's it gonna turn? When's it gonna turn?
Yeah.
And we don't know. Right. So I for those reasons I'm not a buyer in Raytheon. What a great trend. Those are the ones you want to tap into and manage.
If you're a long-term investor and holder, you got to be loving that.
Yeah. Yeah. It's probably doubled, right?
Yeah.
More than doubled. But here we are on January 16, 2018, and the question is, what would I do now? I wouldn't get in it, and it's too late to go long. It's too early to go short, so there's no trade for me. And that's that. So we'll look at the next one, LVS.
So LVS had a huge pop today, right? We gapped up. It ran even higher after we gapped up. Big move, really extended now off the moving averages out of the Bollinger Band on the daily chart. It had good volume today. Not fabulous volume, but it had good volume today. In the daily chart, we've had this beautiful trend since back in February, right? Where we were down around 49 and now we're all the way up. We hit, 74 briefly today? That's a huge run for it. But if you go to a monthly chart, you can see all we've done now is we've run into resistance. We have a double a double top at this resistance level, not an all-time high. And at this point, I'm not looking to buy it up here. If I was long it, I would either be taking profits or I'd be moving my stops up on this, as I think these casinos have had a big run. And I would not be buying it here, not until it can clear this area. And I don't think it's going to clear it right now. I think it's going to need a little bit of time to get going. So not a buyer on LVS.
All right. No joy. John.
Yeah, looking at the fundamentals, it's not one of our favorite sectors. This is a play on Las Vegas real estate, on high-end Chinese gamblers going to Las Vegas. And as much as I hate to say it, the Raiders moving from Oakland to Las Vegas, which is going to be the deal of the century for somebody. You know, it just doesn't have the earnings growth to justify this chart. So we're avoiding the whole hotel sector right now.
Okay. Not interested. And you know, and the Raiders capper, right? That cinches the whole thing right there too, right? Now I got a grudge against the Raiders too, since Marshawn Lynch started playing for them. You know, I'm in the Seattle area, so enough said about that, right? Jim, what do you think about the Las Vegas Sands?
I was looking at Wynn as well as Las Vegas Sands, and they both had volume today, almost 2 times normal. So obviously somebody's buying, and it is breaking out probably on some reason. If you look at valuations here, though, it's about a 27 PE on Sands and 46 on Wynn. So right off the bat, Sands looks a little bit better that way. And then the dividend yield supposedly about 4% on Sands and only about 1% in change on Wynn. So if you had to be in the space, it seems like this is the game in town that might make the most sense. But somewhere between 60 and 63 would make a lot more sense to me than 73. But there's momentum going on here, and stepping in front of it's probably a pretty good dice roll.
All right. Yeah, I kind of hate the chart. I don't care for the sector either. You can see the big drop a couple years ago. It's retraced quite a bit from that. Is that going to run out of steam? There's too many unknowns here. Don't like the sector. Don't like the chart. I don't even like their flagship hotel. It's not that great. So nothing about it appeals to me. I'm a no on LVS. Next up, X, U.S. Steel. This is going to be another one of those. Well, why didn't you ask back when?
Actually, I like this stock a lot still. So this is one I will say I'd be buying it here, and I was actually looking to get long it today. So X, we had that huge run post-election last year on the daily chart. Then we had this sell-off. And during this, you know, we had this huge time period through most of this year where we traded so sloppy through here, right? If you bought a strong candle, you got killed. If you bought weakness, you did good. And right here, back in early November, it changed. You could now buy strength, and it was holding the 8-day. And it's been strong ever since, all the way up here. We have Trump with his infrastructure bill coming out, and that's still coming down. If you look at a 20-year monthly chart, this thing, I'm not saying it's running back up to 120, but I do think this thing can get up to 60 in the next couple of years. I like this long term, and I do think this thing has catalyst to propel it over this 41 area in the next couple weeks with Trump. So I actually would like this one. I would be buying this one here, only because it has catalyst.
All right, we got a bull on the U.S. Steel. John?
Yeah, we've been totally bullish on this for the last year. We bought it just before the election as a Trump hedge, which worked fantastically. We got 160% move out of it. Then sold it when the reflation play was rolling over and dying. Went back in August, got another 50% move. So totally in love with X, trying to figure out how to get back into it. We think it has more to go for many different reasons.
Okay, right to the point. It's a high volume moving stock. So that, you know, depending on your method, there's no lack of action on X, is there?
Yeah, and the ticker symbol is easy to remember.
Here we go. That's important too. Jim, what do you think of X, Jim?
Well, it's in an uptrend, no doubt. It's overbought. Basis the 200-day average, about 31% above the 200-day average. The volume is about 10 million shares a day on a 50-day and 15 million on a 200-day. So the volume is nothing to write home about. But this could be the year of the tangible. And of course, steel is pretty darn tangible. So if it is the year of the tangible, any pullbacks might be an opportunity to get on board. And obviously anywhere between 26 and 30 might be the area to try to do it. If you like, if you get the pullback.
We're going to come back to that term, year of the tangible. Hold that thought.
Yeah, we're big bulls over here on all commodities.
Right on, John.
We think commodities outperform stocks this year.
All right. U.S. Steel. I like Mike's comments about the long term. He was looking at weekly, monthly charts. I think you may be onto something there. That 41.89 level for me is a potential speed bump or barrier. So I'd like to see it blow through that before I got too excited about long term longs on it. So it could stall there with the double top, and we'll have to see. But certainly, if we get a big infrastructure spending bill pushed through and approved, yeah, things like steel and all that. Long way to go. Long way to go. Hey, let's take a pause and talk about symbols that we like, our current favorite trades. And I'll show one that I'm watching. I'll lead off on this segment here, and it'll tie into the tangible goods thought. So here's Rite Aid. What a lousy shopping experience. I hate going into a Rite Aid store.
Yeah.
But what an interesting chart, right? They've been beaten down really, really badly. And I'm a swing trader, right? So I look for a big move and then a correction to that move beginning. And I see the potential for one here on Rite Aid. So a retracement to this big down move could take us up to $5, and we're up at 263. I want to see it. We've got a nice coming off the bottom here with a high, higher low, new high, right up above the Ichimoku cloud. I'd like to see this thing break cleanly, good, clean, strong close above the 200. And at that point, I'm a buyer. It's about 275 up to $5 in the middle of the retracement zone. I like that. And I'm going to send a note to Rite Aid management. All they have to do to make this thing pop is to go, Rite Aid blockchain. We're democratizing the lousy shopping experience, or something like that.
Blockchain just like for Kodak, everybody.
Right? Just like Kodak, right? Failing company, and all they had to do was mumble something about blockchain, and the thing popped from $3 to 12. Unbelievable. Anyway, whether they do that or not, I think there's a retracement, a corrective move up here on Rite Aid that could the prepared investor trader. What do you like right now, Mike? What's your favorite thing?
So, finding good setups right now is really hard. This market has been so much. So I'm really but I want to keep an eye on Micron. And the reason is here, when you look at this thing, it had good earnings. It raised guidance through the roof, and it just had run too far too fast. But it's consolidating nicely down here, and it's respecting that uptrend that I drew nicely. And I think it's a buy off of that. And if it ever gets through 46, you could try buying it off of there around the 42 area here. And if it gets through 46 on volume, look out. This thing is going to break loose. And it's not suffering from the same ailments that, again, the other semis are suffering from, right? It's not in that same problem. It doesn't have the problems of AMD or Intel. I like Micron here. I think this thing could run back. It had incredibly strong guidance, and nobody's really talking about it anymore. It's kind of fallen off the radar here. I like this one.
All right. That looks pretty similar to AMD, or to AMAT.
Exactly the same.
Very similar, yeah.
Yeah. And you liked that one too, huh?
I did. I like these names. These semis have been beat up. The semis were leading this market for most of last year. And then late November, they fell off a cliff, right? And in this market's about rotation. To me, it's only a matter of time before they come back. And I think they would have come back, except we had this whole vulnerability scare that's now taking over the market. By the way, which is now going to provide a ton of new buying into these names because they're going to have to all go out and buy the new chips to get the speed back up from the 60% overhead they're losing on it. So it's going to spur a ton of buying on these names. Nobody's actually thinking about that yet.
All right. Micron. John, you still a gold bug or something new?
You know, it's Intel, Micron, AMAT, they're the whole sector is a screaming buy for about a dozen different reasons. This has got another great chart set up. So yeah, total buyer here. You wanted a dip, here's a dip. You know, your choice is you buy a dip like this these days, you buy something at its all-time high up 50% in 2 months. So yeah, I'll take Micron over the other choice any day.
Okay. Anything else that's on your radar you want to share?
Well, you know, our double for the year is NVIDIA. It was our double for the year a year ago, and it's going to double again off the recent 180 low. So we're well on the way to that, and I'm going to stick with Goldman Sachs. You know, we've already gotten $40 off our double call there. So, you know, we think we have another 100 at least to the upside in Goldman Sachs, you know, now that interest rates are finally moving.
Big earnings tomorrow for them.
Yeah, right. We'll find out if they figured out how to trade bonds again.
And they're going into blockchain.
Well, that'll take another 5 years, 5 to 10 years, but it is possible that blockchain could replace the entire banking system, or that the U.S. government uses it to issue money.
Now there's a thought.
I think you're all stunned with my brilliance, I can see.
I just saw the rabbit go down a hole, man. That's interesting. That's totally interesting. But we're going to move to Jim. Jim, what do you like? Where do you got your money going into right now?
Yeah, a couple of areas obviously are pretty much well known, and that's that earnings are supposed to pick up quite a bit in the oil stocks and in the banks. So obviously those are two sectors that would be pretty well known that they may have a good future this year. But something that I was looking at were the fertilizer and chemical companies like the Monsantos, and then there was this merger between Potash and Agrium, turning it into Nutrien, and then of course you got Mosaic. And it'll be interesting to see if those fertilizer chemical companies can get on their bicycle this year, because there's a little bit of a vibe that could happen. So those would be that'd be an area that, you know, it's not extremely expensive now, that might hook onto that year of the tangible. So we'll have to see, but that's something to take an eye on.
Pretty interesting that you say that, because one of my new picks that I just published to my subscribers, I'll share it. UAN, CVR Partners, Agricultural Chemical Concern. I think this thing's going up to about 675.
Yeah, we're so wary of the ag sector that we quit covering it as an asset class. And the problem is the American farmer is just so productive, cutting his costs every year, that agricultural prices are in a long-term deflationary downtrend. Anybody who sells to that sector, the stocks have sucked for a very long time. So I'd rather go buy Micron than anything that's agricultural related.
What's Monsanto doing to go up in price?
I don't know. I'd love to find out.
Yeah, I'm not tracking Monsanto.
Yeah.
All right, well, those are some interesting ideas. So let's circle back to the list. Next up, GE, the venerable General Electric. News broke today that they CEO is looking at breaking the company up. It's interesting.
Yeah, the only stock in the market that's not overbought.
And it gets pummeled on that news.
Yeah,
with huge volume.
Well, that's because the breakup value is $15 instead of, you know, the current share price, 18.
I gotta be the first. I hate this stock. I've hated this stock forever. It is an option killer. I mean, this thing moves so slow. You never want to touch options on this thing.
Yeah.
And if you look at a long-term chart, this stock barely moves big and much at all. I mean, it really, in the last 20 years, other than that big sell-off that we had back in, '08, this thing doesn't move much until recently, and it's been all to the downside. I don't see a lot of momentum to the upside for this stock. I think they've had bad management for years, and I don't really know how they unlock it at this point. I'm just on the avoid GE. I wouldn't short it here. It's come too far down, but I don't think I'd go long it. That's just me.
All right. A no touch.
Well, touchy. It has the cooties. Stay away from me.
Yeah. There you go. Yeah. All right. John?
Yeah, I'd say this stock has AIDS more than the cooties.
Yeah. I was being nice.
Yeah, I'm in California. I don't have to be nice. The management has been horrific. Perfect formula for buying tops and selling bottoms in industries. And no one really knows what this company represents anymore. So they'll give it, they will not give it the benefit of the doubt, and it'll trade at a big discount. Right now you have the widows and orphans bailing. That's why it's taking it down to this low levels. This was a classic widows and orphan type safe stock. Chopping the dividend, never a good thing for a share price. So there are far better ways to get in trouble than General Electric. So it's a big pass for me.
Okay. You remind me of, I saw a pretty good CNBC interview with Warren Buffett late last week, and he was talking about cryptocurrencies. And he says, I get in enough trouble trading things I understand.
Yeah, that's true. Ask him about Dexter Shoe.
Jim Kenney, what do you think about General Electric?
I think this thing started to deteriorate when Jack Welch started buying 4 million companies that were not connected, and they've been unwinding his shopping cart ever since. And then basically they had the timing of a blind man when they got rid of GE Capital, and then they got rid of all their energy right before the turn. So bad timing, bad investments, bad management equals pretty lousy place. Now, if they break it up and it has a some kind of a big high volume drop to 10 or 5 or 10, maybe you can go in there and view it as a long-term option. That might be the play. That might be the only play.
Well, that was the play when it was $5
Yeah, right.
after the crash.
Right.
Right. The day before Warren Buffett bought, that was.
Or Freeport McMoran at 5. I mean, when these big companies go down to single digits, if you want to play long-term option on them, it's either out of business or a good bar. It's either a bust or a bargain when you get to
Bank of America was the same exact case.
Yeah. They happen, and you can play that game if you want to.
Yeah, I bought Bank of America at $5.
Mm-hmm.
That worked out pretty well for me.
You must have read my trade alert.
Unfortunately, I sold it after I bought it back then.
Yeah, I think I got out at 12. So GE, well, the good news is it's a liquid market. It trades at good volume, 205 million shares today. Right? So you can get in and out if you care to trade it.
Well, that was all on the sell side, though.
Well, somebody had to buy if there's a seller, right?
Yeah. I always hear that somehow it just doesn't work out.
That was a short covering his short, so it wasn't a real buyer.
Yeah, right.
So I'm going to keep watching, see if there's some kind of a correction to trade. I'm skeptical. There's a lot of overhead resistance. It's still in the cloud. It could fail. The 200's way up there. Right, any of those could be significant resistance, but I'm watching it, but there's no trade set up for me at this moment.
Thomas Edison is rolling over in his grave right now.
That's funny. All right, next up, Twitter. I'm actually in Twitter.
I love Twitter.
All right.
Love Twitter. I've been trading this aggressively for the last couple months, both with common and with options. I'm still in both. For me, this chart changed back here on the last earnings day. When we had earnings back here in October and we gapped up, this chart completely changed complexion. It went from being a POS to going up, holding the 821 day, going back up, coming back, holding the 821 day, doing it again, consolidating here on the 8-day and still there, although today was a little bit of an ugly candle. We filled the gaps. When I look at this thing on a weekly perspective, I don't know what it takes to get there, but to me, this stock, I think this year gets to that 32 level and reconnects there. Could be on the next earnings period. It could go there on its own. I like what they're doing. I like the changes they've been making to the company. I like the fact that they're supposed to go profitable this quarter. I think they're finally getting on track. I think Facebook is helping them out with getting rid of the news off their feed. They're going to make Twitter more of the go-to source for news and information here. I love this chart. I still have common, though a lot less than I started with. I think I had 1,800 shares down in the 16 range, and I'm down to about 300. And I still have March 25 calls, although I sold half on Friday into that pop. Looking to buy some back here on the weakness. I do like this chart, and I think it's going much higher.
All right. I get the specific impression that you like this chart.
I like this chart. I've been trading. Yeah, I've made a lot of money off this company in the last 3 months, so I cannot complain about Twitter.
All right, John.
Yeah, I live right next to the company headquarters, and every time I met people for lunch, they were totally depressed. So I just wrote it off completely. Not involved in the stock, don't know why it's moving, so I'll pass on an opinion.
Okay. And Professor Kenney.
Well, it looks like it's gone up to that late 2016 high point, so it's in a critical zone. And today's volume was almost double normal, so there was a lot of action, and it did close down on the day, about 3%. So it'll be interesting to see what happens up here because it is about 35% above its 200-day. So is it in an uptrend? Yes. Is it looking fairly strong? Not bad, but today's action with the volume and the down, plus the $18 200-day. If we do fail from up here, going down towards 20 looks like a pretty reasonable bet.
All right. Well, I'm long. I'm long Twitter. I got long after that earnings move that Mike referenced. It popped up. I waited. I wanted to really see it. I waited for the move up. Higher high, higher low, higher high, higher low. New high. I took it at 22.72. We're up here at 25.28. And the significant thing is it took out that previous high, as Jim mentioned. And I've got a Fibonacci retracement zone from the big when it got crushed earlier. Midpoint on this is about 33. I think you were saying 31, 32, Mike.
Yeah.
I got a price target. I use the lower end of the Fibonacci retracement zone. I got it at 29.75. If I can hit that, I'll be happy. But I'll stay with it for as long as it goes. And yeah, we're in profit. We're liking it. Just trading it with a long, deep in the money, high delta call, and let it run. There we go. Twitter. Okay, next up,
Hey guys. Let's do one from the live audience. Jeff in the live chat asked about a few different ones, but one of them was Microsoft, which we haven't talked about on the show for about 2 months. So let's take a look at that one, MSFT.
Well, Microsoft now looks like a Caterpillar, or what was the one we looked at before that was in that long? Was it Raytheon or something? Yeah, it looks like an established industry, doesn't it? I'm out of turn. Go, Mike. What do you think about Microsoft?
I think you nailed it. If you look at the long-term weekly chart, this thing's just been grinding higher nonstop, right? No pullbacks. And you look at the weekly, this thing just keeps going, going, going. On the daily here, we got definitely got a reversal candle today. I take today with a large grain of salt because, today we had the first selling here and they came and hit the names that have run the hardest. Some of them got hit hard. For me, as long as it holds the previous breakout level, which is right around 87, let's call it 87.50, I think you can stay with this thing. If it breaks below that, it's probably going to go lower at that point. The one thing you got to put in the head is that you have earnings coming on all these names. And for me, earnings are always a crapshoot. Everybody that says, well, you can base what a company's going to do based upon the option flow. Wrong.
Yeah,
I've seen them get it
no
wrong
way.
so many times, right? And the best thing is, remember last quarter when the market makers got destroyed on Netflix on that move, and then nothing else forever met the expected move. These guys are smart. They know how to keep these names in play so they don't have to pay out on options. Once when they got destroyed on Netflix, neither Google, no Amazon, none of these things moved their expected move on earnings at that point. I can't initiate Microsoft up here. I need a pullback to really get into this thing at this point. So maybe weak earnings will give us somewhere down in that 83, 82 level where we can buy it.
I think coming out of earnings too, like Citibank announced today, right? And they had this. My first impression was this is like a big shell game, right? This big new tax bill write-off.
19 billion.
Right. But it went up, right? It's like, wait a minute, right? This looks like an accounting scam of some fashion. So it'll be interesting.
That's exactly what it is.
To see as earnings come out and people start, taking charges and moving the shells around for the new tax code, how that all plays out here.
Well, wait till Apple announces its write-off. They'll have the biggest one of all.
Yeah, but they're going to announce. They're probably going to announce like a $50 billion buyback on top of it.
You mean like they do every quarter?
Yeah, but now they're going to make it even bigger.
Yeah, still, I think a big number. 33 billion is the estimate for the Apple write-off.
Jeez.
But it could go up on the news because they've already reserved against it. So,
what do you think of Microsoft there, John?
We've been a super bull on this for a year and a half, ever since it broke 55, and we're sticking with it. Don't want to initiate new positions. This is one of those where you pat yourself on the back, for being early. But I need either a 10% correction to buy this or a 2-month sideways move to buy this. And notice you've gotten neither for a year and a half.
Right.
It's almost like an Amazon chart.
And Jim.
Well, again, it's 21% above its 200-day moving average this week. So it's extended. And so it would, if you owned it, you might want to investigate the calls on the upside and see either call writing or collar situation might not be the worst thing to investigate at this point. Seems like a lot of these stocks, as we're mentioning them, are a fairly good distance away from their 200-day averages, and that's discounting quite a bit of the news we might hear. And as we go into the State of the Union address at the end of the month, we could remain strong going into that, but maybe it's a buy the rumor, sell the fact after that speech.
Yeah, but you're showing the same chart over and over again for everything.
Yeah.
There's just not a lot to chase here. Except for the special situations like AMAT and Micron.
Biotech. Nobody's talking about it, but biotech.
Biotech is cheap now. We're a buyer of biotech here.
But we'll get to that. But yeah, if you have the cojones to take some of those, they're cheap.
But I think you were the one who said it, Mike, and I heard John affirm. It's getting harder to find good trades, man.
Oh yeah,
it's scary. It's tough. This is a market that hasn't given us a 3% pullback in 15 months now.
Yeah, right.
We're gonna find out who the stock pickers are here, right? David, did you have any other coming in on the live feed you want to look at here?
Yeah. Someone also asked about Facebook, FB.
I haven't looked at Facebook in a while.
Well, Facebook got pummeled on Friday.
Yeah, that's because they changed their business model.
Yep. So Facebook to me here is, that was an interesting announcement the time it came out ahead of earnings when it's at all-time highs, right? So, you look at a long-term chart and this thing has just been a steady, mover up. Any pullback towards that 50-day on a weekly chart has been golden if you can get it. You can see we've only pulled back into the 8-day, not into the 21-day on that big move. That's how high up and extended we were here. So at this point, to what I'm advising people who follow me to do is you have to trade it now versus this gap. You have, if it tries to go in, if it holds the lower end of this range right now, the bottom of this candle from Friday, which is 177.20-ish, you can try to go long off of that. If it and then try to take it into that gap. I think 176 is a better entry. That's this channel up here. But I do think, you know, they could wait till earnings at this point before they're moving, though I doubt it. I personally would like to see it do a reversal candle. I'd like to see it drop below Friday's low, reverse, and come above it and give us an entrance into that. Maybe down off the 100-day even would be even better if we can get to that right down here at 175.50.
I can't wait to talk about Facebook, but John, you're up first before me.
Yeah, I'd buy that dip, even if this stock is top for the medium term. The next big move is going to be up. And if you're nimble and fast, wait for the stock to bleed a little bit more, hits major support, couple bucks down, and then buy it for a trade. You know, you might get $10 out of it or something. So yeah, we were all ready to pull the trigger on a trade alert this morning to buy this thing. We saw the whole market rolling over, and we said, well, maybe later. We're still watching.
All right. Jim?
Yeah, the volume on that sell-off was enormous. So you would imagine a lot of people who wanted to sell got filled. And so right now that 170 mark's got to be something that you want it to hold. And then, of course, the 160, 163 area. So those are your two lines in the sand if you're trying to either hold on or maybe looking for a place to get on board. That seems like two reasonable numbers to think about. But, you know, sometimes after those kind of big volumes, the market kind of does nothing for a while. So we'll have to see if it just meanders between 170 and 178 or whatever it's doing. It did break the 50-day, so that was one card down. But the 200 days way down at 164, and it might have a harder time getting down to there.
Yeah, the trade we had set up for this was a deep in the money call spread that had room for a $10 drop, and you'd still make money.
Mm-hmm. Well, you got it.
So Facebook and their business model change. Yeah, how many years have they spent, you know, encouraging and coaxing and training their commercial folks to build connected audiences and to engage and, you know, drive traffic and posts and stuff through engaging your audience. And then they said, oh, by the way, yeah, that doesn't matter. If you want to get exposure, you got to pay. What a slap in the face. And if you remember Peter Drucker, one of the things he did was, you know, he'd walk around the mall and just see where all the kids were going. And that would kind of lead him to go investigate the next big hot company. And, you know, I'm blessed to have a 19-year-old son, and his friends will have nothing to do with Facebook.
And that's true.
Yeah,
absolutely nothing to do with
same with my kids. They're only looking at Snap and
Instagram.
Instagram,
yeah. And probably some other ones we haven't heard of, right? And so it's really interesting, you know. So Facebook, you know, it's about grandma posting kitty pictures, right? But you know,
guess all the grandmas died off, you know.
Right, but you know, who knows? I'm a technical trader, but I just look at those kind of things and I just wonder if they've forgot how they got here, right? And interesting to watch. If I can see if it breaks down below the Ichimoku cloud, which is an important, and it's thinning, which so it could, you know, we get down to 175 or something, we see a turn. I might be bear on this thing. It may go fill that gap first. It's got a little time before it does that. We're premature to try and short it. That's my next move. I'm not looking for a long on it. You know, part of it is I'm a technical trader. I trade based on the setups 100%. But if something about a company makes me uncomfortable, I'll walk away because there's thousands of other ones to go look at.
Yeah.
And something about Facebook going long makes me very uncomfortable. And even if the setup's there, I ain't taking it. So that's that. That's me. One guy's opinion. Let's go back to our list. FCX.
FCX, Freeport McMoran.
Mm-hmm.
So, by the way, I love something you said. I think it was, I'm not sure who was John. I think you said it, is that you were looking to buy Facebook today and you bailed when you saw the market. I bought BABA, a couple of options, and I bailed after 10 minutes and got out when it started pulling because I looked at the market and said it's not good. And that's something I think you have to teach people out there. When you go to get in a position, the market turns against you, don't just stay with it. Get out. Especially with options, you can always re-enter these positions.
Yeah. Easier to dig out of a small hole than a big one.
That's exactly it.
That's what I tell my people. There's no law that says they have to have a position every day of the year either.
You know, I sold today, and I got out of BABA for a small loss, took profits in Apple and XO and Mobile, and I called it a day.
Yeah, the best trades that you do in a year will be the small losses.
Yep.
You know, it's I talk, you know, like you guys, I talk to a lot of people about trading and a lot of customers and stuff, and occasionally, you know, you run into people who go, well, what about commissions, right? And it's like, if commissions are a factor, you're with the wrong broker, man.
Seriously,
Yeah.
people say that to me all the time. I'm like, what do I care about my commission costs? If I'm making money, I don't care, as long as they're not obscene. And it's not like the old days. You spend like tons of money.
It's a commodity, right? It's a hyper competitive commodity, right? Commissions ought to be a non-existent part of the equation.
Well, we tell every new reader the first thing you should do is call your broker and ask for them to cut commissions by half, and they'll do it because they make the money off the trade flow and not the commission.
Yeah, it's an interesting kind of a, old world order. What's the commission, right? It used to be really expensive, but
hey, yeah. I date back to 25 cents a share commissions. It was an easy life in those days. As a broker.
Right. I think this is gonna be our last symbol, Freeport. We'll just one more lap around the pool here, Mike.
So this is where I say I screwed this trade up. There was big option flow that came into this name back around, I think it was on this day here, right around the 24th of November, right in this time frame. And I got into it and I got bored with it because it wasn't going anywhere, and I just pulled the plug up like, I don't know, like 10.50. It was something small. Nope, not a big winner. And I watched it bang around for a couple of days and laughed and said, see, I did the right thing. This thing never goes and never moves. And guess what? It went. And not only did it go, this thing went vertical for what, a month and a half? I mean, this thing just wouldn't stop. And I watched this thing every day and looked at this thing and I said, I'm not going to chase. I'll wait for it to pull in. I'm not going to chase. I'll wait for it to pull in. Oh, guess what? It never pulled in. So when you look at this up here now, you look at it and you say, okay, I missed this trade. It's up at 20, right? You had a run in a month and a half from 14 to 20. Long-term chart, it took out the 200-day on the weekly average and is holding above it. It's a little extended. It came right into resistance here. But if it can consolidate up here, a move like that, a little bit of sideways action, I think your next area on this is this 24 area. And I don't see any reason with commodities being in play this year. And I agree with you guys. I think this is going to be a good year for commodities. I'd be looking to buy any weakness on this. If you could somehow get this thing to dip down towards this 1850 area, the 21-day on a daily, I would be buying this thing and loading it up. As long as the markets were strong. As long as the markets were not in sell-off mode.
I like the honesty, right? I missed it. And it just is what it is, right?
What else are you going to do? It's true.
Right, but I think that's part of being a mature trader too. Is you go, right? Okay, I missed it. I'm not going to do something stupid because I missed it. Right.
You know what I bought? I bought Vail and Vail instead. Made a nice trade on that.
Yeah, it's 6 of one, half dozen of the other.
Yep.
Yeah, I got another
one in this group is Broken Hill.
All right, John.
Yeah.
Freeport.
Total bull on Freeport. We think it goes to $50 over the next 2 years. Classic breakout on the charts. If you can get back to the old resistance point at 18, that's your new support. Anywhere close to 18, you've got to double in that in 2 years. Do I make myself clear?
Mm-hmm. Yeah, read my lips, right? Double in 2 years. Got it. All right, Jim?
Yeah, this is something I talked about here at this broadcast back in December when it was starting to get the 50-day moving average to cross over the 200-day around 14.15, and I thought it was a pretty good deal down there, and obviously it was. And now that it's jumped up to 20, making it 42% above its 200-day moving average, it's certainly not the same deal it was in December. Having said that, it looks like it's in a bull market, and so if you could ever get it down towards 15 to 16 on a pullback for whatever reason, because if it breaks this 18, 19, or this 19 area, maybe there's a sell-off coming. But if you did get it down there, it might not be a good place to start picking up some more. But certainly the bet was really the 14, 15 area back in early Dece.
All right. I like it back down to this 18. I think that either Mike or John talked about that, and that's just going to come down and touch the cloud. And at this point, that looks like some pretty significant support. And I think it was John said, previous resistance would be support, and it could be. So I might be interested if it comes down here and then shows signs of reversing and taking a long on this. I think it's got some room to go. I like it. So let's go ahead and wrap. So if you got any kind of closing thoughts, if you got a link or something you'd like people to go check out, let's do that and then bring this thing home. So Mike, closing thoughts for you, sir.
First off, David, John, everybody in the room, thank you so much for having me on, Dean, to be with the show. I love doing this with you guys. I get to do it about once a month with you. For everybody out there, just trade the action. Turn off CNBC and all these things. Don't listen to everybody screaming the market's going to collapse. If the market's going to collapse, there's nothing you can do about it. Days like today, you reduce risk and you figure out what comes next. But we haven't even freaking hit the 8-day on the SPY or any of the indexes. So there's no reason to get overly bearish here at this point. If you're interested in what I do, I work for AlphaShark, alphashark.com. Come visit us. Option flow in the room, trade ideas all day long, 5 different moderators. We just did a trial for, I think it was $30 for a month. I think AK would probably give that out again if you're interested in. So just hook us up, hit me up on Twitter, and I'll hook you up with that deal. Thanks for having me again.
All right. Hey, good to have you here. John, closing thoughts for you, sir.
I think David's got some slides out there hiding around somewhere. You want to get them up there, David?
Yeah, it's up.
Okay, yeah, Diary of a Mad Hedge Fund Trader, Global Long Short Macro, issue about 250 trade alerts a year, up 58%. Last year, we trade everything all the time, long and short, and have a great long-term track record. We're also launching the Mad Hedge Technology Letter in 2 weeks, which will be completely dedicated to trade alerts in the technology area where I live. So madhedgefundtrader.com, love to work with you.
All righty. And Jim.
Optionprofessor.com has got the DVDs going over all the different strategies on the options, whether it's for cash flow purposes or limited risk spec, or would it be for hedging? So you can learn a lot by getting those DVDs, and shooting an email over to optionprofessor@gmail.com would be the way to get some more information.
Okay. And I'm Dean Jenkins, followmetrades.com. This is my website. And a good way to put your toe in the water, find out more. Sign up for my free newsletter. We just did one yesterday and talked about cryptocurrency and quoted Mr. Buffett on his take on it and had some fun with that. So check that out, free newsletter, Beyond the Noise. And beyond that, if you got any questions, just shoot me an email, dean@followmetrades.com. And it was good to be here. It was fun. You guys were all really interesting, and we looked at some great charts and had a good discussion and offered some valuable insight. And look forward to being with you all next time. And I'm going to go ahead and send it back to you, David, for the wrap.
All right. Thanks, guys. Great show. Just want to remind everyone watching to be sure to hit the YouTube subscribe button if you haven't yet, to get updates on future shows. Also, the Crowd Forecast News show was off yesterday because of the market holiday, but we'll be back next week, January 22nd, Monday at 1 p.m. Eastern Time. Also, the 20th episode of this show will be back on, or will be on Tuesday, January 23rd at 9 p.m. Eastern Time. So be sure to join us for both of those. You can always go to TimingResearch.com/live to view the current live show or the next live show. And just want to thank all my guests again for this week. Mike Pisani of AlphaShark.com, John Thomas of MadHedgeFundTrader.com, Jim Kenney of OptionProfessor.com, and Dean Jenkins of FollowMeTrades.com. Thanks, everyone.
Thank you.